This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, he's not a robot. He is Rob Reinhold.
Well, thank you, Patrick. I have been told I have no emotion, but I think that's actually a good thing when it comes to the world of trading in my profession. So I am not a robot, but I would like to be. It really bothers me when I cannot be a robot. So this episode is actually going to be very helpful for me.
Yes, welcome to the Dead Inside Club. Yeah, population you and I for now. Now, a quick note for everybody. Zoom just had an update, and I have not optimized my audio settings on Zoom for years, so I have no idea how we're coming across right now. If it comes off a little weird, just know it's temporary, and we will have optimized settings hopefully by the next time you hear us. But moving on, this has been a question that I didn't really know how to address. I knew how to address it, I just didn't know where to address it. And so I think on a trading psychology podcast, Rob, it's actually a really good idea, because there is an amount of dread going on amongst some people because AI is all the rage right now. It's all anybody's talking about. It's all anybody wants to invest in on the big board market. And it's obviously coming. It's growing at a really fast rate. And people are wondering, should I even bother learning how to trade if AI is just going to end up taking over? So we need to break this down into a few different sections. And the first section is, let's kind of break down why people might think this way. So we have this broken down into three different sections. And the first one, Rob, is why do you think people think this way? Some people are worried, some people are not, but let's focus on the people who are, because even if this isn't at the top of your mind, this might be in the back of your mind somewhere. Is it a logical fear? We'll talk about that in a moment, but let's just kind of unearth why people might have any inclination whatsoever that our jobs as traders or future traders may be in jeopardy.
I think that's a great place to start, Patrick. And we really have to start with kind of different personalities. So let's talk about all these possible different people who are in the stock market, in the Forex market as traders. Where they are in their evolution is going to be a huge factor of how they feel about AI. Imagine if you were a first-year trader. AI is probably something that you are really looking forward to and you're really excited about, and you're saying, oh my gosh, this is going to really help me in my profession or my chase to be a trader. Imagine you've got someone who's been in the market for 27 years like myself, where I've built many, many systems. I've back-tested so many systems, and all of a sudden, things might change. And things changing are not good for me because I'm a little tired of putting together systems. I'm a little tired of testing systems. And this is going to change things, and I don't want them to change. So I think what it really comes down to is that the people that are looking at this in a negative way, they probably think they're going to be losing something for when AI comes into this marketplace. What do you think about that, Patrick?
Yeah, I think that's probably it. I think, like I say a lot of times too, people fear the unknown. And the best way to get rid of that fear is to make the unknown more known. And I think that's probably a more appropriate place to for towards the end of the show. But that was my concern as a content creator at first, and we just didn't know what was going on. There was all this new stuff coming out, and it was all Generation 1 type stuff. So you also have to ask the question too, is this stuff going to be what sticks around? Or is the really great stuff not even invented yet? And then what does that look like? So it's just a lot to take in. And then there's this narrative all over Twitter that you better do something because AI is going to be taking a lot of jobs in the future, which you can certainly make the case for. So how would you correlate this to the trading world? Because I think people all over the place are concerned, but we're here to talk about the traders.
Well, this is really interesting because all we need to do is look back in history. Every single generation has an existential crisis. I remember about 10 years ago, my daughter, she was about 15, 16, and she was becoming very concerned about the environment. And she was really worried about it, really worried about what was going to happen, and was she going to have a world that existed when she got to be 40, 50 years old? And she was really worried about it, and I sat her down and I said, look, every generation has this fear. In my generation, we had something called the ozone layer. Have you even heard of that? And she kind of looked at me. She's like, no. I said, look, in the 80s, the ozone layer was going to kill the world because the ozone layer, this protective surface of the atmosphere, was basically getting holes burned into it from some of our waste that we had, mostly styrofoams and carbofluorins, or I don't even know what it was. I said that wrong, but look, it was eating a hole in the ozone layer to where the direct sunlight was coming into the earth, making it too hot and, having all sorts of skin cancer. It was an existential crisis. And our generation worried about it a lot. The generation before, it was nuclear war. Nuclear war was going to wipe everyone off the face of the earth. I still remember doing nuclear bomb drills in elementary school where we got in the bomb shelter. Patrick, I know you're a little bit younger than me, but do you have that memory at all?
Yeah, I'm not too much younger than you, but no, I don't remember that at all. The closest we did is where I grew up in the Midwest. We're close to the New Madrid fault line, and some quack seismologist said we're going to have an earthquake. It's going to be terrible. It's going to be worse than the one in the 1800s that made the Mississippi River run backwards. And it's going to happen on December 3rd, 1992. So we had earthquake drills where we would get under our tiny desks as if that was going to do anything. And that was our big scare. But nuclear drills, no. That makes me think like Cuban Missile Crisis, and that's way before your time.
No, it was right at the end. I was born in 74, so, they were still doing those drills in the early 80s. It was pretty nuts. Anyway, this is not about trading whatsoever, but I want everyone to understand that every generation has this crisis, and every generation of traders have the same crisis. I mean, let's just go back to the 1970s. The way the stock market worked is telephones. You called your broker called their head office called down to the traders, and if you looked at the New York Stock Exchange, there were thousands and thousands of phones, and they set them up on these circular posts to where there was about 10 phones, and you went to one of these phones and you just picked it up, you called your head office, and they gave you an order. And you had to walk over to the place where that stock was trading, so let's say it's IBM, and you had to flash some signals up at the people on top of the IBM post. Like, I'm buying 500 shares. Then you walked back to a telephone booth, you called back to your home office called the stockbroker, and then the stockbroker called you and said, we got the shares at whatever. That's how it worked. Can you imagine if that was your job as a trader and this electronic trading started to happen? You would freak out. You would freak out and you say, whoa, I'm going to lose my job. This technology is taking over. Now, let's talk about it. Did some people lose their job? The answer is yes. I mean, what do you think, Patrick? What do you think about those people that had just gotten so used to doing it one way and then new technology came along?
Well, I'm trying to figure out who those people are because, for example, you don't see actual floor traders hardly at all anymore. Like the CME's down to nobody. There used to be tales of that lifestyle and that debauchery and just how crazy and aggressive those people were. Now they're gone, completely. They just don't exist anymore. I think there's a few floor traders left at the New York Stock Exchange that you see in the background when you're watching CNBC, but I think that's mostly cosmetic these days. That entire industry got wiped out. So I'm just thinking of those people in particular. Were they right to have that crisis and to be concerned at the end of the day?
The answer to that is yes, they were right to be concerned. My very first time going to one of the trading floors was in 1998. 1998, maybe it's 99, somewhere around there. And I went to both the CME, the Chicago Mercantile Exchange, and the CBOE, the Chicago Board of Options Exchange. And I went down there, went to the pits, met some of the floor traders, and I was talking to one of the floor traders, And I was saying notes how busy it was. He's like, this is nothing. It used to be so much busier than it is now. So I started talking to him about this electronic trading and what he thought about it. And he said, I love it. I love it because I can actually not even come into the trading floor. I can just go to my firm's office. And we have a direct connection to the exchange to where I don't even have to come down to the floor if I don't want to. And it gave them a lot of flexibility in their life and how they wanted to do it. Now, he loved it. Now, obviously, there's going to be some people that did not love it. Some people that just weren't able to adjust. And that's what this is really going to be about, is the ability for you to adjust as a trader. When I started trading in the late 90s, we did what is called bottom-up trading. If you think about it, all that means is bottom-up trading is you start with trying to find a story, trying to find a stock. Back in the 90s, there were mutual funds around, but they weren't super popular. If you were going to buy and sell a stock, you had to buy and sell the stock directly. So every single little stock was its own little island. And people were literally looking to buy and sell this particular stock. And the only way that anyone bought this stock was they had to put in an order to buy that specific stock. And the stock moved up and down based on the supply and demand of what people thought of that one stock. Not what they thought about the whole market, not what they thought about the sector or anything. That's how I started. The world has completely changed with ETFs, with indexes. Now, a single stock, the smallest component of what happens to that stock is what individual traders and investors think about that stock. Because that stock is likely part of an index, part of a sector. It's probably in about 10 different ETFs, maybe 50 different ETFs. And so the waves of money that come into this ETF is going to push this stock up and down. So now you better know what the sector is doing, what the industry group is doing, what the rest of the market is doing, because that accounts for about 80%. They've done studies on this, Patrick. About 80% of any stock's movement today is based on the market, the sector, and the industry group, ETFs. 80%. 20% is the smallest part of it, and that's individual buying and selling of the stock. Does that surprise you?
No, it doesn't, because I was around for that change too. I've been able to see the genesis of it and how it's evolved. And another one I want to add is the addition of, not really algorithmic trading, because that's been around for a very long time, but the systems out there that do it at a very high speed, high frequency trading, your quant trading. That was a really big thing. It's still a thing now, but it was a really big thing years ago. And everybody kept saying how, these people are making trades by the nanosecond, and how this is really going to disrupt the market. And so that has been something in our time that we've been able to see, right in front of us. Almost no matter how young you are, unless you're in your teens or your early 20s listening to this right now, you probably remember trading before this was really a thing, and before a lot of offices started employing people that did this. So just know, we have seen these things before, and I guess the question really is, at the end of the day, was there reason to be concerned?
I want to jump in here, Patrick, and tell about my favorite guy on TV. For any of you who watch CNBC, there's a gentleman named Art Cashin. Art Cash, he's not on CNBC all that often. They bring him in just for special occasions. But Art Cashin is one of my favorite people. I remember back in 2008, I'd been trading for about 10 years, 11 years, when the absolute worst stock market crash we've seen in about 100 years, well, about 80 years at that point, happened in 2008. And banks were going out of business overnight. Bear Stearns on the brink, Lehman Brothers collapsing, capitalism collapsing. At some point, we were concerned, is capitalism even going to survive this? Is there going to be any banks left? And I remember I had never seen anything like this before. And I love they had Art Cashin on. And Art Cashin is this old guy. He's been down on the stock exchange floor since like 1940. He's got to be like 100 years old now. And he's like, oh, they are. So they're like, Art, what do you think? This is crashing. This is crazy. What do you think? He's like, you know what? We saw this in 57. We saw it again in 62. I lived through it in 77 and again in 87. You know what? This is what's going to happen and it's going to be fine. And I remember thinking, how can he be so calm? Like, capitalism is collapsing on itself. And you know what? He was right. He was absolutely 100% right. So I just want to share that story with you to kind of let you know, if you're fairly new to trading, this may be your first existential crisis where you believe that you may not be able to make it as a trader. Once you've gone through a bunch of these crises, you're going to be just like Art Cashin and be like, you know what? It's just another change.
I'm not so sure about that, just because I don't know if that's quite an apples-to-apples comparison. That's something that happens cyclically, to where with AI, we're talking about an actual sea change here. Similar to the way we were talking about before, how all that manual trading was the way, and then it became not the way. Everybody was trading long-term, and now you have this high-frequency trading, and now that's a part of trading, and it's not going anywhere. And so I would wager to say that with AI, it's probably going to be here to stay in some capacity. What that capacity is, we really don't know. So let's drill down a little further, Rob, and jump into our next section. What do we kind of understand why we might fear things like this, because we've feared things like this in the past, whether they came to fruition or not. But drilling down even further on a trading level, what exactly do you think is going through a lot of people's heads when they hear about AI as it pertains to trading itself? Especially technical analysis, too, because that's the way a lot of us trade primarily.
Patrick, I actually want to send this first one back to you because this is something you've done your entire career, or at least most of your career, is run very systematic algorithmic trading strategies. And I think the biggest fear is that people are worried that the thing they developed, the strategy they developed, is no longer going to work when AI comes along.
Yes. And so the question at that point really comes down to, how do these AI decisions, well, first of all, we have to know how much it's going to permeate the market. All right. It's just like with quant trading, how much of the entire market is going to be that? If it's small, then it's going to have a small effect. If it's going to have a large, it's going to have a large effect. So let's just take the worst case scenario and say that institutions over time will see how AI improves their bottom line, and so that's what they're going to turn to. The first thing you have to ask is, how long is this transition going to take? But let's just go total worst case scenario and say it takes over very soon. And it just becomes the way. How will this affect the price action that we are used to seeing? Because if it does, then yes, a lot of the back testing I did is not going to be relevant for the future. And that's, to me especially, Mr. Do most of it by hand over here, that's a lot of sunk cost. And that is a lot of optimizing I have done to get to where I am right now. And to think that I might have to go back to square one with the rest of everybody else is terrifying.
And that's very understandable. I mean, it's a long, hard fight to get to the point where you're solidly profitable as a trader. And anything that threatens that is absolutely going to be scary. So, look, the change is coming. And I think the biggest thing that this whole episode is about is that change is inevitable. And just like back when we went from paper trading on the exchange floor to electronic trading, there was a change there. And the people that adapted were fine, and the people that didn't were not fine. And I think one of the biggest worries that people have about AI right now is that we all know that we are not as smart as AI. We all know that we are not as fast at making decisions as AI. We know that when we look at AI, we as people cannot compete head to head. And I think that's another thing that people are really worried about, is they're looking at the reality of AI is way smarter than us. Now, I want to share another analogy with you, one that I heard probably 2 or 3 years ago when AI was just starting up. And this really hit home. It really sunk in because, it's a concern, it's a worry. And when someone said this, I said, I get that, and I really am excited about this. They said that AI is going to be like the navigation that you put on your phone. So let's say you're driving and you're driving downtown. And the navigation system is simply going to show you the most efficient way to get downtown. You may say, you know what, I want to avoid tolls. I only want to do this. I only want to take right turns, whatever. But AI is going to show you the most effective way to do it. And then let's say that there was some unforeseen traffic that happened. AI is going to show you a different way. Now look, you don't have to do what the AI says. We still have free choice. So let's say AI said to go straight on that street. You can take a left. You have full autonomy to take a left. And the AI is not going to get mad at you. It's not going to, put you in jail. It's then going to say, oh, they took a left. Well, now this is the most effective way to get there. So this is not us versus AI. This is not you versus AI, because yes, you're right. You will lose that every single time. I want everyone to reframe this. You with AI. That's going to be the way that this is really going to help out.
Okay, so that is a good example, and I would even argue that Google Maps kind of already does that. I think AI will probably do it at a much more efficient rate. And like you said, yeah, you can choose to use it or choose not to use it. But I think, back to the fears real quick, if it helps your bottom line, people are going to use it, individuals and especially institutions with all that money. So not only somebody like me who is 14 years in, having to relearn or redo everything I've done, that's a terrible fear to have, or somebody who is just learning right now, and it's like, wow, I have all this stuff to learn, but why bother if somebody with no talent or some institution that just has a ton of money just flips on the AI switch and just has AI do it for them? Why am I even relevant? What is my place in this world? What is the point of me even learning this when I'm just going to get replaced? And this is not just Forex trading. This is indices. This is metals. This is crypto. This is everything. So as an aspiring trader, I don't feel like I have anywhere to really turn if AI is just going to come in and reduce the need or eliminate the need for me to even exist. I think that is a logical fear. So that being said, let's go ahead and switch this over to the actual reality. So I want to talk about first, Rob, kind of the reality of the situation, and you illustrated that really well with the navigation. But I think there's a lot more personalized examples we can give as far as the trading world goes. And then I want to provide some solutions at the very end too, because I think all these fears are legit, but I don't think personally they are probable. How do you feel about what I just said? Are you kind of on the same wavelength with me? Do you think people have a legitimate right to fear this, or do you think it's just going to be the ozone layer all over again?
I really need to quantify what fear of that means. Does fear of it mean that, it kicks someone in the butt to, learn how to change and adapt? Or is it fear that just stops someone from even trying because they give up? So I think it's absolutely a legitimate fear, and I think you are hitting all the right points and just spot on. The big question is, does that cause you to quit, give up, throw your hands in the air, say, I can never compete? Or does that motivate you and say, oh, damn, I better get on my horse and start learning some new things? So, yes, you're right on. It's scary. It's fearful. Things are going to change. But it's all on how you deal with it.
It is. And I'll go as far to say that I think the fear itself is overblown in the trading realm. So in other sectors, you might have a legitimate fear with this. And I think really the emotions we're talking about here, Rob, are not just fear, but dread and demotivation, maybe. I think are really the emotions we're targeting here alongside with fear. And really, the point here for me at least is to tell everybody that personally, if I had to put odds on it, I think it's going to be a factor. But we have to understand what trading is at the end of the day. And what trading is at the end of the day, I don't even think AI can come in and mess with too much. Because at the end of the day, it's still supply and demand. Less so in Forex. We'll get to that in a moment. But it's all algorithmic too. And what I think is going to happen is you're going to see with AI, it's kind of the same thing you see with EAs right now and with quant trading. It just looks for patterns, which is the exact same thing we're doing. So I remember going back to what we were talking about at the beginning of the show, Rob, how, when all of this new innovation came into the trading world, from a price action standpoint, which is mostly what I deal with as a technical trader, I can't really say I noticed it. Maybe it happened, but it happened over such a period of time that I can't sit there and say, I can sit there and say the volume was more in 2013 in the Forex market than it is now, because of course it was. But apart from that, as far as actual price action, the things I see on a day-to-day basis and the things I notice, it's still kind of the same, even with this new technology. And I don't see AI making a big difference here. What do you think?
I am totally unconcerned about AI. Totally. Because let me tell you why. There's all of these books and all of these websites. There's all of everything to help you with the world of trading. But let's just get down to the core of what trading is. What makes an asset go up and down in price? There's only one thing. There's one thing. Supply and demand. AI is not going to change that game. It's not going to change that core game of how many buyers are on the left, how many sellers are on the right, and how many people are behind them. Now again, we say people, maybe it's not people, maybe it's AI, maybe it's AI systems, maybe it's, there's 10,000 AI systems out there all running different time frames, different strategies. I don't care if it's people or AI systems, I just don't care, because in the end, one of the sides is going to have more orders than the other. Or let's not even say orders, more money. So money in versus money out causes assets to go up and down in value, period. So if you just focus on that and you really think about, okay, how is AI going to affect that? Okay, maybe AI can make things move a little faster. Guess what? Electronic trading made things move a lot faster. Guess what? People adapted. It's fine. I am so not worried about this. I'm just only excited about this because I'm really hoping that I can help myself and my traders pick up more efficiency. So I just want everyone to understand. This is the one point I wanted everyone to understand in this episode, is the core of trading is that there are buyers and sellers. And at some point, they're even. Prices don't move. Sometimes there's more sellers than buyers, prices go down. Sometimes there's more buyers than sellers, prices go up. That is the core of trading. And AI is only going to assist the people that are doing that anyway. I don't see anything to be scared of.
Now, before I go too far, some of my old school listeners are going to jump in and say, wait a minute, VP, you don't believe in supply and demand in the Forex market. And you're right, I don't. But Rob alluded to it. It has to do with where those orders are and how much money is in those orders and how many orders are there. And that's what the banks look for. But step back a little bit. The reason why those orders are there are all due to sentiment, which is due to behavioral patterns, which is what technical analysis is looking for anyway at the end of the day. So whether it's supply and demand or whether it's order books, whatever it is, it's still behavioral patterns. It was 50 years ago. It is today. It's going to be the same 50 years from now. So I don't even really know how AI would even help me become a better trader. I'm interested to find out. But, Rob, this is something that you said when we were talking before the show. And I've heard this too. And I was really more thinking from a content creation standpoint. My fear was like, man, you mean to tell me that somebody with no talent, no charisma, no original ideas is going to come in and have the same chance to rank on YouTube as I will, or to, compete in the podcast space like I did? That was a fear of mine when I first heard about it. But now I'm thinking, it's just going to be an enhancement. You said it's not AI that's going to take your job. It's somebody using AI that's going to take your job. And you know what? That's a lot more comforting, because guess what? I can learn how to use AI too. And now what? Now what are you going to do? Now I just took your advantage away from you. So even though I don't really know how that's going to make me a better or worse trader or a better or worse content creator, I'm willing to learn. I'm willing to use it. And just like you were saying before too, with all those floor traders, the conversation you and I were having, I think all those floor traders lost their job as a floor trader, but they just went into electronic trading, or they just went to a brick and mortar, or they just started a hedge fund. Like, they're doing something different, but they're doing the same thing with trading, and that's probably what we're going to have to do too, in some way. But it's not going to be some crazy transition. We're starting at the same level as a 16-year-old kid right now in terms of what we can learn through AI. So there's no advantage there or disadvantage. And again, if there is some kind of big sea change in the way people trade, we can adjust with it just like anybody else can. And if we're doing it in a different way, then we're all doing it in a different way. And at the end of the day, if you're trading charts like we do here, it's all pattern recognition, regardless of who or what is looking for it.
You nailed it. It's just the willingness to change, the willingness to stay on top of things. And this is why we did a episode on programmatic trading, and I came out and I said I loved it, 100% in support of it, but I hated black boxes that people bought and they thought they could run forever. Remember that? Patrick, do you remember that episode where I was really negative about people that bought this thing off a shelf and then thought that for the next 40 years it was going to run and be profitable?
So when you say black box, do you mean that thing that would tell you the news, the numbers like 15 seconds ahead of everybody else?
No, a black box is basically just is an algorithm that never changes. It just never changes and always is just firing off. It's just a computer program with no manual entry, no oversight, no anything. You set it and forget it, they would tell you. The thought that would run for 40 years and be able to keep up with the adjustments to market conditions is laughable. And so I'm really at the same point here with AI, is that, the strategy that you're trading right here, right now, I promise you in 10, 15, 20 years, even without AI, the market will change to where you are forced to change with it. That's just being a trader. Being a trader is always looking at the market, always trying to figure out where your edge is, how do you get it more efficient, and that's where I really think AI is going to come into play, and then how to improve it. That's the world of trading. I don't see any difference with AI here at all, and in fact, I only see opportunity.
Yeah, I do too, and I think the only people really, and I'll kind of wrap it up with this, the only people who should be concerned are the people who just, in general, if this is just your personality type, you just refuse to evolve. I think even a lot of you are going to be fine, but we can all adjust together. We can all use the same tools. And so for example, everybody here knows I'm big into MT4. It has all the indicators. It's easy to use, but it is prehistoric, let's be honest, when it comes down to charting. And if it gets phased out over time, and it's slowly getting phased out in certain places, I'll be fine. I'm not going to like it. It's going to be a bit of work. I may have to pay somebody to reprogram my algorithm into a different language, but that's fine. Then I'll be at the next level, a place where I can stay for the next 10, 15 years of my trading life. That's just...
Hey, Patrick, maybe AI could help you with that recoding.
Possibly. Would I trust it to? I don't know. But yeah, if it saves me hundreds of dollars, I might give it a try and see what that looks like on a new platform. So yeah, it's like I more embrace it. And this is somebody who's a Gen Xer who's, not afraid of technology, but not just, it's not the only world I know. So, yeah, I just don't see, unless you're just so old and set in your ways that you just don't want to do anything any other way. I think people like you were doomed from the start anyway. It just depends on how. I think the rest of us were going to be just fine. I think price action is always going to be price action. And if there's tools out there that can make me better at anything else or make anything else more efficient, I'm down. And I'll tell you right now, Rob, I barely use Google search anymore. I go straight to Gemini and just ask it what I want to ask it because it's going to give me a more specific answer. So I'm already liking version 1.0 of what I see, and I'm excited for the future.
I'm very excited as well, and we are actively working to bring this into Maverick trading and Maverick currencies because, like you said, if you don't evolve, you die. So we always evolve at Maverick, and we're always going to be evolving as much as possible.
Yeah, trading, as far as you go, traders, is probably not going to go away. There's actually a pretty good chance it's going to get even better. So on that note, thank you everybody for listening to the Trading Psychology Podcast. Rob and I will see you next time.
Goodbye, everybody.